on tax and fiscal stimulus measures in this period of the COVID-19 pandemic. I have here Mr. Yomi Olugbenro, tax expert, partner, and West African tax leader for Deloitte, Nigeria, and also my senior co-host, Mr. Bosun Omofaye, financial analyst and CEO of Frontier Africa Reports.
Good morning. And good morning, Mr. Olugbenro. It's good to have you on the show with us.
So, Mr. Yomi,
we know now that it's another 14 days for the lockdown, an experience that we've not had. Most states that had this kind of thing in June 12, 1993, a bit of it. So we'll go straight to the key issues around tax and fiscal stimulus measures at this point. How would you review government's responses so far from the fiscal stimulus measures, particularly focusing on tax? We'd like to get a view from the federal to the subnational level.
Okay, I seem to lose you at the tail end of that, but if I get you right, your question is around what government is doing now, particularly on the tax side from the national and the subnational level. Is that correct?
Yes, very right.
All right. Well, you know, the crisis is both a health and medical emergency, but it's also a huge economic, it also throws a lot of economic challenges into the country. So the bulk of the responses so far, and expectedly so, has been around, you know, how to contain the medical impact and the medical crisis, and making sure that life is safe and people are back to work. So a lot of the interventions have been much heavier on providing stimulus and measures that will help to manage the medical crisis. So funding support to make sure that on the medical side things are ongoing. So from fiscal side, I think a lot has been around the funding and the support that the federal government is providing at the central level, and also to the states that are largely affected, so that from a medical side, we can deal with the pandemic, you know, upgrade medical infrastructure and make sure that you know, people can come back to work. So the announcement we've had so far from the tax side has been around, you know, administrative measures that will help taxpayers to you know, manage their compliance obligation during these tough times. Some of those measures are essentially around, you know, deferral of deadline for returns and payments. So at the federal level, and a couple of the sub-nationals, a couple of the internal revenue services have come up to announce delay in, you know, deadline for filing. So if, for example, you have businesses have an obligation on a monthly basis to submit one type of tax returns or the other, from VAT to employees' income tax returns, you know, to withholding taxes, and also to the annual income tax. All of these have specified deadlines, and if you fail to meet those deadlines, you ordinarily will have been liable to interest and penalty. So recognizing the impact of the lockdown, one of the measures were around, you know, giving extension to timing of filing of returns, for example. So businesses can, you know, take 1 or 2 months, in some cases a few weeks more, to be able to plan their obligations. So we have those announcements from the federal, we have those announcements from, you know, from the states. We haven't had so much around specific tax cuts that bigger economies are, you know, are rolling out, and for a number of reasons. One, the fact that the Finance Act that kicked in earlier in the year already anticipated or made provision for some bit of some measure of relief, which ideally would have been one of the quick things that the government will have announced. But that came in much earlier, like the relief to micro and small businesses, tax exemption, reduction in tax rates. So if you put all of that together, you can say we have some bit of measures there. But there are obviously a lot more that still needs to be done. But my sense is that a lot of attention now is focused on the first phase of the crisis, which is around devoting a lot of energy and a lot of attention to the medical crisis and to the health challenges, and then we'll move on to the other phase.
So how far-reaching are these policies and tax measures at this point? What's missing, and what other economies are doing in this regard? What will learn from them?
Yeah, so I mean, different economies are responding based on the size, of the economy, based on this, the size of the fiscal buffer that is available, and a whole lot of things. So there's a lot of context to the measures that many countries are rolling out. So you've seen some countries rolling out economic loan and bailout funds, even to taxpayers. Some are, announcing payroll tax cuts, for individual. Deferral of payments is quite a lot. Some economies are lowering rates. But all of this will be determined by the context and the size of the economy and perhaps maybe what the economy has been doing prior to now. So for me, I think what is probably most critical at this particular point is a lot of coordination, of what is happening and what intervention the government is going to be rolling out. So we've had a CBN governor, mention a whole lot of intervention. The finance minister, came to roll out a number of fiscal stimulus package, and we're aware that the vice president has been made by the president to head a special response team. So what I think is far more critical for the country is to ensure proper coordination and synchronization of the various relief measures, and all of that, because this is a moving target, all right? This pandemic, we can't tell for sure today, the 15th day of April, to say this is the breadth and the ramification, of what will happen. What will be happening. So it's turning out in phases. So a lot of coordination will be required so that we can channel the very limited resource that we have in the country in the best productive manner. I think that for me would be topmost. We need to strengthen whatever all that we're doing currently from a containment measure in terms of dealing with the medical emergency. So close to many of the states for the responses so far on the medical side. But the broader economic challenge that this throws, on our plate is huge. Is huge. So how do we manage the post-COVID Nigeria? So how do we deal with the potential slide into recession? How do we deal with the potential job losses? And the disruptions to businesses, and all of that. This will require a more holistic and coordinated response from both the managers of the economy and the fiscal manager.
I hear you very well when you talk about coordination. Now, Mr. Bolson.
World Economic Outlook report giving very clear signal for the need for central banks to really step in more in terms of monetary policy, supporting the economies to stabilize at this point. And we've been discussing prior to this about the 27-page report from the Central Bank of Nigeria, turning the COVID-19 tragedy to a strategy to push the Nigerian economy forward. I guess you have one or two interventions in terms of asking Mr. Yomi, based on what you've seen there.
Yeah, I think what the central bank released late yesterday night was a little bit of some what we call an intervention or a continuation of the unorthodox monetary policy interventions, which has its fingers in the fiscal space, but trying to use the strength and the capabilities and the instruments of the central bank to get the private sector to work with the government. I think to an extent, what the central bank is trying to do is to be the midwife between the private sector and the federal government. And I'm beginning to see that. When I read the 27-page document about 10:11 last night, I said, this looks like the unorthodox policy is like the private sector have their fears or apprehensions in dealing with the government. So this, I think the central bank has been asked to do it, or the central bank is taking the initiative on its own to say, look, we can help the central bank, or we can help the federal government, and the central bank governor alluded to that severally in that particular, in that 27-page document, even though some folks say it could be less than 27 if it is a little bit shorter. But again, whatever number of pages, and what is important here is that the central bank is helping the government to achieve some of what he could have achieved on his own, but using the private sector platform to achieve it. For example, the 15 trillion naira target for an infrastructure company PLC, Infraco. Now, the idea of the central bank here for this particular, which is central to part of this conversation, which is targeted at the transport infrastructure for Nigeria, logistics, which will help manufacturers, small and medium enterprises to get on, is just all about using the instruments of the market to help this company raise the first 1.5 trillion. Okay, it's not as if the central bank is putting money into it, but to help, to bring everybody on board and say, look, we want to do this. The private sector is going to be run by an independent fund manager. 1.5 trillion as the initial fund. The gap, the funding gap is huge. It runs into trillions of naira. The central bank doesn't have the money. The Nigerian government does not really have them. Doesn't have the money. Our entire budget is just about 10 trillion. So it will sink the whole 2020 budget, and we need more. So the idea is to use the private sector to come in and believing in the credibility and integrity and the powers of the central bank to manage it moving forward. So this is taking it a lot further, asking the private sector to step forward and assist the government. And I think we should have some measure of faith in what the central bank is trying to do here. Because the government of Nigeria will keep borrowing from China, from Taiwan, from wherever, to build infrastructure, whether we like it or not. This comes at a cost. But if you allow the private sector to do both debt and equity package under an infrastructure company, a PLC, which I'm sure would have to be listed on both the Nigerian Stock Exchange and FMDQ Securities Exchange. Once you list this PLC, for example, you allow the market to provide the much needed both domestic and foreign capital that will help deliver infrastructure for the government. So it's not an agency of the government, no, it's a private sector fund. And I think I took that away from that. That is one. On the other hand, you have a bit of, and how the central bank broke it down into from 0 to 3-year program. Some of it will be, the back end of it is the manufacturing sector. And go back, which is very critical. But within the manufacturing sector is also the healthcare sector, which Yomi spoke very well about. The central bank is trying to use this new policy measures approach moving forward to wrap up on what it's been doing under the COVID arrangement, which is the immediate palliatives, to ensure that there's another fund to be raised to support research, to support research institutions, to support manufacturers of healthcare products and healthcare facilities, so that we can develop a healthcare system that works for every Nigerian, irrespective of anybody's social status. To my mind, that was good, and that's a good approach that the central bank is working on. This is the first time we are bringing healthcare into the conversation, and education, mainstreaming it, and mainstreaming a few other areas like manufacturing, continue to support medium and small enterprises. The banks have been asked to work together with the government on this, and I think it's a document that is worth everyone looking into. So, from what I saw in that document, I guess, and I have every reason to think so, that the fiscal authorities must have asked the central bank to move ahead and do what it can, while the Ministry of Finance and the Office of the Vice President on Economic, I think they've shared everybody's work for them. And the central bank is the central coordinating point of the Office of the Vice President must have given the central bank its own job to do, and that must have been the result of what we saw released late last night. I don't know what Yomi thoughts are along this line. Beyond the tax, and I understand we can't do much of tax now. The Finance Act was just still fresh, as it were, was just about a few months old or thereabout before the pandemic. So we can't tinker with that for now. Some folks are saying we should revert the VAT from 7.5, and I said that doesn't look like.
But Kenya reduced that from 16 to 14, but people have said that these are different.
You have different scenarios. We just increased it, and there were incentives for companies, small and medium enterprises, and all that with it. So you can't just pull that back quickly and say we need to. I'm not sure we can do that for now. So the government will have to get a lot more creative to support companies, large, medium, and small corporates and individuals, as everybody to move on from point A to point B, especially post-COVID-19.
So Yomi, can you hear me?
Yes, I can hear you now.
Okay, so we're talking about the CBN 27-page document talking about how it's turning the COVID-19 tragedy into an opportunity for a new Nigeria.
Right, that's right.
In that document, we're seeing ideas like a world-class infrastructure with a take-off capital like 15 trillion naira. This is trying to build economy, bring productivity through manufacturing, transportation, infrastructure. So how would these kind of ideas help to galvanize productivity, which is very key for economy at this time? And what are your thoughts at this period about the VAT, value-added tax? Mr. Yomi, can you hear me? Mr. Yomi, can you hear me? Okay, we'll try to get back to Mr. Yomi. We're having some slight technical challenge.
So it's business time. It's about 9:30 in the morning,
yes.
and the stay-at-home work from home means that everyone is working from home.
Yes.
So as I speak now, I can expect folks holding meetings,
yes.
Traders who want to trade,
yes.
the currency market,
yes.
trading the various financial assets. They are on. Yes. If you want to trade equities, so I'm sure the trading engine of the stock exchange is humming right now.
Really
yes. So right now, everyone is is online. So WebTV is online. So never went off online. So there's a bit of a pressure on interconnectivity right now, and I think it's testing the infrastructure of the ICT system we have in Nigeria. And I think we should also bring that a bit in here. This is the time for us to also see the need for us to upgrade on the various infrastructure that we have for ICT, science and technology moving forward, so that whenever we have a major problem like this moving forward, we'll do infrastructure. We'll do a little bit better. Yes, we still have a lot of unfinished issues around our what you call the fiber optic network. So we need to do a lot more so that we have a more robust. But I understand that around the world, where you have this massive lockdown in the UK, even in London, there are a lot of pressure on the internet and the various digital platforms that folks are using now to reach their friends, their loved ones. Those guys who are in the front line of the pandemic, the medical authorities are also using the internet, superhighway and all of that. Everyone's trying to communicate. So there's a bit of pressure on that, I understand.
So let's look at the CBN still on this 27-page document.
Yes.
they talk about the continuation in terms of prioritizing the provision of efforts for the importation of machinery and critical raw materials needed to drive a self-sufficient Nigerian economy. How would this begin to play out, considering the need to manage this particular aspect very effectively for economy?
I've read a few reports and comments from professionals about what the OPEC deal will do for Nigeria. Some folks believe it by Nigeria a bit of time to stave off likely currency devaluation. Right now, the U.S. crude is about $19.20. That's the lowest since 2002. Before I left this morning, Nigeria's benchmark Brent was slightly below 30, about 29 plus, thereabout. So we're below even the 2020 budget, revised budget. So technically, we are in the water, as it were. How we will get out of the water? First, make sure that we don't sink. Then that we get our head above the water and eventually pull out of the waters remain to be seen. So going back to the central bank document, I think is worth giving a push, considering the fact that it's been staggered from immediate to short term and what you can call the long term, even though it's a 3-year, but again, you roll it forward and try to see what happens between now and the year 2023. Based on what the World Economic Outlook release of yesterday from the IMF was in terms of recession coming through at about 3.4%. About 3.4%. That is bad news. But again, how do we?
I was looking at a 3.3% growth outlook, and now it's talking about 3.4%.
Yes. So a few days ago, I asked the question: can we have a figure here? Now the IMF has given that to us by the spring meeting. So let's take the negative GDP reading for the year on board and see how we can work our way backwards from there. So I think right now the Ministry of Finance, the Office of the Vice President, they are digesting that figure and asking all the relevant MDAs and everyone to see how, and the private sector, what can we do to mitigate the 3.4%, if we can reduce it, if it's possible, so that we don't get as much as 3.4% contraction for full year. And even if we have a contraction, how do we ensure that we keep people working and happy and hopeful? And that is the point here. And I saw most of what was in this, the central bank governor's policy paper was more about giving hope moving forward. So trying to find ways how to create jobs around light manufacturing, agro-industrial area, processing, logistics, getting some funds together to help companies via the banks who want to invest in agro-processing, moving raw materials to the processing factories, and getting the finished goods from factory to markets. So it looks like the document explains a bit of a value chain here, and all in support of what the federal government is doing. This is good. This is what you expect the central bank to do at this point in time. And I have...
So the CBN is in line when the IMF says they want the CBs to really...
The central bank is an agency of the government. And when there is fire, you throw everything you have into it. You have a cup of water, just like this. Whatever dent you think it may do, you just throw it in the water. It may just be all that you can. On the monetary side, the central bank and most central banks around the world are getting to the end. The backs are against the wall, in a manner of speaking. So there's a bit of a limit. But again, in a country such as ours with very huge infrastructure deficit, they're not discussing infrastructure deficit right now in developed economies in France, Italy, Germany, Spain, and the US. The conversation is not around building infrastructure. Logistics is a bit of a problem. It's not for them. So, thank you. So, but we have these huge problems, and someone has to step up to the plate. How much of foreign borrowings do we think the Nigerian government can do moving forward? We're looking at about $70 billion in terms of borrowings here. That's in Naira, we're close to 30 trillion Naira. So the private sector, and as I said a few days ago, the big boys who have the deep pocket have to see a vehicle. Maybe the Infraco PLC will be the vehicle for the guys who are donating billions of naira now in cash to fight the pandemic. Yes, and they can put additional $1 billion into this Infraco PLC to help build infrastructure, because whether you're building hospitals or you need the or you want the pharmaceutical companies to produce more, look at the roads in Abara in Ogun State, for example, the industrial estate, where one or two of these pharmaceutical companies are based, like Pharmadeco and others. The logistics to the transportation is bad. Yeah. If you're going through Badagry Road, it's a mess. It's being worked on, but it's not a finished job. If you go through Ogun State, Sangota, Ifo, it's a mess. It's a complete mess. Yeah. So you need this infrastructure. So we can't just discuss the healthcare and discuss monetary policy, buying bonds, treasury bills, intervention, without discussing how do we get the MSMEs to get their raw materials to the processing facilities or into the markets or to storage or warehousing. If we're discussing commodities exchange or commodities market, infrastructure, logistics is part of it. Very One of the listed companies on the exchange, which is into logistics and was trying to raise some rights issues. Yes, a couple of months ago, to invest in logistics, road transportation, because of the intervention.
Very central to that.
Tomorrow I'll share some pictures and images here. You'll be shocked how farmers and those who are in the middle of buying from the farmers and taking it to the nearest market, the dire situation they face, because the access roads are just horrible. They were as archaic as they were 1,000 years ago. So we need an agency that is independent of the government, but that can support the government by using the private sector. For example, we have the NIDF right now at the marketplace, which is the Nigerian infrastructure debt fund, floated by Chapel Hill, which is an investment bank, and they've done a couple of series, and they've done a few billion for naira. We can use that template for the, as a vehicle to support Lagos State and a few other states that want to do private sector infrastructure, and they're making good progress, and they're giving returns to investors. We can do that on a national scale through this suggested Infraco PLC by the central bank, which is 15 trillion, which is a lot bigger. And I'm sure folks like Chapel Hill would want to be part of it. Other banks in Nigeria would want to come in. The deep pocket individuals, PFAs and others would want to come in because it's a private sector-led arrangement. Okay? And that reduces the burden on the Nigerian government to borrow more from China and others to fund infrastructure because we're not using our own money. And 2 days ago, I spoke about this direct domestic investment versus foreign direct investment. So I think this is a very creative idea that infrastructure is at the center of it. And what they also spoke about by the central bank is that the renewable energy. And that power is critical. So this Infraco PLC would also invest not just in road transportation, but I think it will be a bit of power, it will be a bit of power as well. Renewable energy, which is clean, instead of just the fossil fuel which we're used to. All this should give us a sense of where we're going moving forward. So I think everyone should take it on board, add suggestions and comments on how the central bank and the team should work on this. The document cannot be implemented without the government. And I read from there that Mr. President is happy with what the central bank is doing, and must have asked the central bank to do more. So it's taking their time to put this together, and I think it's worth a try. Let's see if we can get back. Mr. Yomi Olugbenro. Mr. Yomi, are you there?
Mr. Yomi, can you hear me? I think we've lost him, but we'll still have Mr. Yomi come on and speak further.
Yeah.
Because tax is a very critical issue at this time. I mean, how governments roll out the policy and strategy is very critical. So your closing thoughts.
The government needs money. And government is not likely to tinker with tax for now. We just have a new tax regime on our hands, which is still very warm. I won't say hot, but it's still very warm. So I think we can leave that for now and find other ways to incentivize, stimulate the people, look at strategic sectors that we can work on. And I think the central bank policy priorities, 8-pronged agenda, yes, key themes. Thank you very much. It provides us some light, shed some light on where we need to go. And I think it all goes to areas where we need to create jobs and where we've been losing jobs and where we can quickly ramp up post COVID-19 pandemic. And this speaks to my mindset over the last couple of days, that we need to quickly identify those sectors, move on very quickly, provide some guidance moving forward so that banks, investors, local and foreign, okay, I think Nigerians want to do this post-COVID. It makes sense, and I can put my money into it. So this is a way of attracting, of looking for investment. I see that document by the central bank as a marketing document to say, we want investments, everyone. We want your support. We have these plans. You can look at how you can play within this 27-page document, and it will be immediate, short-term, and long-term. And then we can begin to have conversations moving forward. So I think it's an investment document. The central bank is helping the government to shop for investment, critical investment, both local and foreign, and giving everybody a plan of what they intend to do. And I'm sure that some conversations must have gone on. Then right now, they will be able to approach certain sectors and say, these are our plans. Can you tinker with it? How do you think we can make it work in the overall interest of the federal government? Because again, whether you like it or not, you cannot, in conclusion, continue. The world will no longer be the same. And I take that from what the world has changed. That's what the central bank said. The world has changed, and for the generation to come, the whole idea of globalization may be dead. So, because every country now is onto himself. Yeah. So whatever help you're getting from IMF, the World Bank, the FDB, African Bank, whatever, you still have to grow and develop your own domestic economy. You need to develop your industrial base. You need to develop your manufacturing, in particular, to drive productivity at the base level, in which will allow you to employ millions of people and move it into large corporations. Yeah. Those are my thoughts at this point. Thank you. My pleasure.
Nice having you on for the 10 o'clock session. So that'll be all for this Nigerian economic discourse, where we looked at COVID-19, tax, and fiscal stimulus measures in Nigeria. We had Mr. Yomi Olugbenro, partner and West Africa tax leader for Deloitte, Nigeria, and of course my co-host, Mr. Bolton, who is still here with us for our 10 o'clock session. So I'd like you to continue to engage us as we will take you in the market review with Mr. Tunji Andrews, an economist and creative entrepreneur. We lost Mr. Yomi Olugbenro at the point, but we'll still have him in a series of economics discourse to look at this very, very important topic on tax and fiscal stimulus measures. So till we come your way again, thank you for watching, and just stay tuned for 10 a.m. where we'll discuss the market review.